We're affected by the ongoing trade talks because shipments. Hong Kong is regarded by the US as part of China for customs purposes. That separate recognition was withdrawn by the US after the NSL took effect, and so all of our exports, which are mostly re-exports from China anyway, are tariffed. So that's going to affect the level of trade, but hopefully in the very near future there will be a climb down. So there's a history of change. Change is always happening and should, because that's how markets reform themselves. And we used to be a much bigger attraction for mainlanders for shopping, and they are now a much bigger attraction for Hong Kongers for shopping. There are probably still attractions to coming here and buying gold, for example, gold jewellery, particularly if you can wear it home and say, I came out with it and it's not subject to inward VAT. There are some things where we still have a trust advantage, I think. Probably mainlanders trust the products here a bit more than they do in the mainland. Then Hong Kong becomes quite an attractive shopping destination for US people. You jump on a plane from from Seattle or Los Angeles. If you don't want to go to Vancouver, if you're not if you're near the Canadian border, you just go over there and pay a small amount of sales tax. But you come here, there's no VAT. We are a free port, and thank goodness that's in the basic law. They've known this system since '83. It works well because we're a very externalized economy. I mean, Hong Kong is a small place. Effectively, you exchange your US dollars or other foreign currencies for the Hong Kong dollar token for the US dollar when you come in and out again. And given that trade is several 100% of GDP, it wouldn't make sense to have a floating Hong Kong dollar. But I hope that one day, and it should have happened long ago, China will abolish capital controls completely and have free movement of the RMB across its borders. And when it does, and after a few years of being confident that it won't go back on that, then I think Hong Kong would probably start adopting the RMB as its currency, and the Hong Kong dollar would fade into obscurity at that point. But right now, the Hong Kong dollar system works. GEM should be scrapped. There should be a single board in Hong Kong. There's hardly any difference between the two sets of regulations anyway, and we should scrap the profit requirements, because making a profit before you go public is a target for accounting manipulation. It's like you have to fake it to make it. And then, of course, after they go public, the profits collapse. So let's get rid of that rule. We've abolished quarterly reporting on the GEM board. We've given up talking about it on the main board, even though the motherland 20 years ago introduced mandatory quarterly reporting for all mainland listed companies. They are ahead of us. How bad is that? We're supposed to be the financial center of China, but in some ways the mainland is ahead of us on disclosure. We need to make Hong Kong stronger in terms of investor protection, to raise the price that investors are willing to pay in our markets, and that will attract companies that are willing to sign up to those standards, reinvigorate our financial markets at a time of disengagement, because there's pressure on Chinese companies listed in the USA to move back from both sides of the Pacific. So we need to provide a more trustworthy framework, in proper independent directors elected by independent shareholders, quarterly financial reporting, a class action system for investor remedies when directors abuse their companies, and things that would make investors willing to pay more for stocks. It's and also one share, one vote, instead of these treating tech companies as if they're somehow special and need to have the founders with excessive voting rights relative to their equity. I always encourage investors to do their own homework. Don't expect the market to tell you what the stock is worth. The market only tells you what buyers and sellers are today trading the stock at, a price for a minority shareholding in a company that usually has a controlling shareholder. And that price may be manipulated to some extent or to a large extent. And if it is, then it might be far away from fair value, below or above even. It doesn't have to be just above, it could be manipulated downwards for reasons to benefit certain people. So do your own homework. And the regulators should not waste time trying to prosecute so-called market manipulation when they should be looking at the internal bad governance of companies, the fraud, the hidden loans to connected parties, the ways in which they steal money from companies, basically. That's much more important